Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Monday, June 5th, 2023. I'm going to begin here on the hourly chart, just so that to update our current picture and what it's going to look like going forward, I believe. In the S&P, we did kind of get 2A action, but initially we did run up. We poked our nose above 4,300. We got up to that resistance at 4,305. Actually, it was a little bit above because the resistance was 4,303. But we got up to 4,305 and then began to pull back, and then we began to drop more strongly after Apple did a little bit of a reverse. Now, what is going on is pretty much continuing to follow the current analysis, in that I had been talking yesterday in the big picture technical update that the S&P, the ES, basically still felt that it was still within the minute third wave, which is a part of a diagonal triangle still forming. So what it looks like today's high did then complete was wave 3, minute wave 3. And you can see it here. It's an A, B, C. And the C wave, 5 waves up. So it worked pretty cleanly, as a matter of fact. And so I'm going to continue to adhere to that, looking for that fourth wave. Now, what the problem has been during this run is that pullbacks are minuscule. And by that, I mean, we have these, and though it may sound or look like 42.97 down to 42.80, it was only 17 points. This one bigger, 42.05 down to 42.71, I believe. Let's just see what that low was, 73. So we have 27 plus, we have 32 points. But in essence, now I put it down, if we're going to get any type of a pullback here, I'm really looking for something that wants to come down 42.60, 42.43. Let's get back to a point where it's going to actually produce a more solid fourth wave and then set us up for that finishing rally. Now, what's of course come into the conversation is, I'm going to get asked a million times, is that it? Is that it? Are we over? The only way that would come into play is if I was able to move this 3 down to here and the 4 here, and then this would be the fifth wave and it would be complete. But the third wave would then be likely the shortest wave, and we can do a very quick check of that. If we have 43.05 up there on the top and 41.74, so 43.05 minus 41.74, that's 131 points. And let's just take this one, which was 42.43.25, and we're going to take out this low, which is 41.13.75. That's 129. That would be the third wave. And we already know that wave 1 is definitively not the shortest wave. So it would leave wave 3 to be the shortest wave. And therefore, that is another reason why I have moved it, and it's an ABC, and that 3 ended up here. So once again, just to double confirm, so we have 43.05, and actually we'll put that 0.25 up there, 43.05.25 minus this low, which is 41.74. It's 131 points versus 129 points. Wave 3 cannot be the shortest, and I'm pretty strong on that one. Even though it's only 2 or 3 points, I'm still pretty strong on it. And because wave 1 is definitively, cleanly not the going to be 42.27. And we're going down to here, actually here, which is 40.61. Oops, 42.27 minus 40.60, minus 40.61, and that's 166 points. So it can't. I'm putting it up there. We're looking for the fourth wave, and then we're going to get a fifth wave up. Once I get that fourth wave, I'm going to go out to my 4-hour chart so we can start to line things up. We have right now our fibs for the minor fifth wave, which is what we're in. Now, we have a couple of things in the way as we continue to move higher, hopefully, in essence, to put in these tops. So we have basically a call wall, as it's called, and then you have to understand how the options are trading and things of that nature at 4,300. And that basically held its own today. Above that, we have a position that is by Morgan Stanley. That is the talk of the town. And that's the one that they rolled on March the 31st. And they rolled it up to 43.20 in the June contract. So I think if we look, and we just put SPX, and we're going to be going towards June the 30th. That's the quarterly. And then we're going to go to the 43.20 call, 44,000. That's the open interest. So there it sits. And the puts were much lower, but there's the call side of it at 43.20. Basis June 30th, the expiration that'll happen on June the 30th, the last day of the month. So that's still there. So that tends to provide resistance, as it's either going to be defended or they're just going to have trouble getting up and through it. But above all of that, we continue to have our resistance points. And let me go back out to my 4-hour chart so we can take a look to what we have above for the entire primary B wave. We have resistance at 4,400, and that is where wave C would be 0.618 times the length of wave A, primary A, coming down from the all-time high down to there, 0.618, right there at 4,400. So that's going to be some pretty stiff resistance, number one, because we're looking for wave C to complete, and it's actually going to have additional resistance, so we can start adding additional points in here. And let me just clean out some of this so we can retracements. Going to get rid of that. And this one I'm going to leave up because it's going to put those. That's where those are coming from. And then we're going to take a look at wave internally. We have, oops, I need to change that. Excuse me. We have the fibs that go along with intermediate wave C of primary wave B. And those have been remaining, but here they sit. So we continue to have where wave C would be equivalent to 100%. So it's equality up here at 45. But what we have coming in between all of that, we had the 618 here. And so what we get next up would actually be the equality. But we also have 43.13, which is going to sit in conjunction with this high, what comes up next above it, and then the 43.20. And then we have 43.67, and then we have 4,400. Now, what I will be adding to this as I bring this back down, and let's look at the 4-hour chart, is we want to be able to fit in where minute 5, right? You're going to be in a triangle. I'm going to bring it down one more. Minute 5 as compared to minute wave 1. Unfortunately, I got to bring it up to the 4 because I can't get the bottom of minute wave 1, which is way down here. This up a little bit so we can get a good look at it. And so if we get just basic normal retracements going here. So I'm going to put this one back up, and we're just going to give some estimates, as we call it, guesstimates. So I'm looking at, and change this back over to this. Now we're going to compare minute 1 to minute 5. It's going to be tough because it's basically a triangle. But let's just say we get down to here. Or I'm going to call it, let's see if we can get down to, we got 236 there, 382. Should pretty flat to where we've already been. Then 618 is 4333. And equivalent would be way up here at 4396. So again, we have an equivalent for minute wave 5. And please understand that minute wave 5 is if that minute 4 comes in at 0.382. So these are guesstimates. If I had to remove this, and we're going to take a shot to say, let's say 71 was it, it's going to push it a lot higher. So I got to let this come in and form before I can start to fill in the gaps about what we have left and what that all could be. I mean, I have put down to here, and I've continued to use those, and they seem to continue to have follow through here. And that would start to tend to push us to 43.38. And that's using this low. So again, that's bringing the 3 back down to here, and that's being the 4. Because right now, it's just actually B of 3. So we're still got some stuff out there. And a lot of different levels, but I can take that basically off because it's still there if I run it there, but it has no association with what actually could be minute 5. So we're going to have to let this pullback come in. Again, if the market turns and starts heading up and gets itself above today's highs and keeps going, well, then we're going to have to connect it to there. Now, let's just, for the sake of the exercise, I'm going to first take off the retracements, right? So these are all resistance levels at various points. So we're going to go from here to here. And we're going to go all the way up to here. Now, what does that begin to look like? Well, we have the 618 at 43.67, actually, 43.74. And then we have 100% at 44.38, which just happens to be 1.618 for wave 5. So you get some interesting numbers if this is it. So when I run the combination, this is kind of what I'm trying to do here, just kind of give an idea. Right? We're waiting for this low to come in, but what if that is the low? We've seen it already. That the low was 42.73, and that happened today. So if that's the low for minute wave 4, well, here's our levels. 43.72. Well, then we have 4,400, which matches up with the larger primary B wave, and also the 62% retracement level for the entire drop, all of that primary A wave. So 62% retracement back up is 4,400. And remember, that one started from 48.08 down to the 35.02. I believe it was 35, but yeah, down to that October low. And there's your 618, 4,400. Happens to match up. And then we have with, like I said, it matches up with 78.6 for minute 5. The 1.618 for minor wave 5 at 4,400, I believe it's 44.38. Yeah, 38 matches up cleanly. Actually, it's 39. What's 38 is that minute wave 5, if indeed that low completed the wave 4, comes in at 44.38. So we have a cluster there. We have a cluster there. So it's equality, and basically 618 of minute 5 equals 618 of minute wave 1. That comes in at 43.73. So we still, and these, I actually would not be using this one, but it happens to line up pretty cleanly with the 70.5. And that 70.5 is the C wave. If I go back out to the daily, the C wave, and those are coming in right here, right? The C wave. And that would be here, and then we get minor wave 5 here, and then we get minute wave 5 here. So these, the whole kit and caboodle of primary wave B, those are here. So actually this 70.5 at 45.10 overlaps with the 100% for wave C equaling wave A, and also 1.382 of minute wave 5 to minute wave 1. So we've got clusters, clusters, clusters. So we should be meeting up and this position, this particular counter trend rally should be meeting its maker pretty soon. But now we have potential for all of these levels. And mind you, we're continuing to roll towards the 14th of June, which is when we will get the next decision from the Fed, whether it's going to be a pause, whether they're actually thinking or even considering to cut the rate, or are they going to give us a 25 basis point hike, which would fit their plan? Now, there are just so many things, folks, that truly continue to just spell that there's so much going on. I mean, we just need to continue to think that inflation is just really, it's too high still, even though we're getting some indications that some parts of, the inflation cycle are beginning to relax a little bit. But when in terms of the employment numbers, the number of people going back to work is going to continue to put the pressure on wage inflation. So there's still inflationary pressure that we have. Our interest rates are too low. So the stock market and the housing markets are kind of being priced a little bit weird when you're taking a look at the long-term fundamentals now. That's why I tried to separate them. We're looking at two different types of pictures, a technical versus a fundamental. And the biggest one I think right now is how traders are continuing to cling to that pivot narrative. Like they're going to pivot or they're going to pause, right? So, because boy, we just got out of this debt ceiling stuff and Drew was just trying to recover from that. It's like, what are you talking about? Nothing happened. A lot of hype, a lot of worry. But sincerely, they met the bills. We got that word from the Treasury today. So, and they're able to meet them going forward. So here's what we got lined up in the S&P for right now. And so again, the levels themselves can change, obviously, if this is not wave 4. Again, I'm hoping I can get down to 42.50 to 42.40, put a nice wave 4 in there. It should come in an ABC. So maybe we get a little bit rally back up. We drop back down, get down into here. I can put a 4. I make my adjustment on my fibs, and off we go into a wave 5. It will change, of course, these levels. So what can I leave in? Right now I can leave in 43.13, 43.67, and 4,400. Right? Those are what I can leave in. And I can bring this back out to my 4-hour chart to show you where they come in. See, here we have minor wave 5. So we're in that almost that finishing leg of minor wave 5. And then we start having these. Right? This has already been tackled. So this, as far as minor 5 is concerned, gets pushed up to here. Next one that we look for. First is 618. Second is equality. Third, 1.618. So we're way up here at 44.39. Then we've got this one, which remains, and that is the larger primary B wave, reaching 0.618 retracement of primary A, 4,400. Then we have the C wave right in here, 618 already superseded. 70.5 is at 43.13. That could be this particular fib level. It comes from old SPX traders, and those are the guys that were on the Chicago Mercantile Exchange that traded in the SPX pit, the old SPX futures pit. That's where this one comes from. So I'm thinking it still can be valid in terms of still trading the S&P. So it's 43.13, and then we have 43.67, and then we're back here at 4,400. So the 100, where we have equality in wave C to wave A, up here at 45. So none of this is out of the picture yet. We're getting a little tired of dealing with it, but we are getting to our completion point. And now we actually do have, at least another week and a half before we get to the Fed decision. Over in the NASDAQ, boy, it just keeps reaching up for the stars. And today we're kind of just looking at what did we just complete here. Now, what I have done, I kind of got to a point where I was like, okay, I got 1, 2, 3, 4, 5. If I put the 3 there and the 4 here, and then I have 1, 2, and this finished 3 of minor 5. What's that going to look like? And here we have it. So I have also laid out, those are the very ones that are kind of all stuck in there. These are the pullback. Okay. Pullback can get to 14,523. That would be beautiful. That's 382 of this third. That works. Beautiful. Love it. Want to see it. Then I can connect this one to that one, which is not going to take us very high. But that's just, we're just basing it on equality. We want to see 1.618. We want to see what goes up from there. Because we have 1.618, 2.618, and 4.236. So we got all those to add that could take us up higher. If we're just going on the minor fifth wave, we have 0.382 at 14,738. Okay? And that's me raising this to this level, right? Because I moved the third down. If I had to put the third here, we would be in just deep, deep trouble in terms of where this thing can get to. So I moved it back down. It's clean. It truly is clean. I'm going to go back out, show you. There's 1, 3's right there, nice and clean. And I put the 5, and now we're, so again, let me open that up so we can see. 1, 2, 1, 2, 3, 4, 5, clean. 4, I'm going to have to get over it. I really wanted it to come down to there, but if that's all I got before they start to take off and make new highs again, I'm going to accept it and then bring it back down. So here we have minor 1, now attaching to that. So we're in that minor 5. Where can this minor 5 go? Well, we got 15,000 right there, and that's 618, right? We have 50% of 14,889. 382 at 14,738. Let me take it back down. Let's see how close we're getting. Today's high was 14,686, 692, excuse me, and 3/4. We're knocking on 14,700's door. Gee, if Apple just kind of decides to turn around and say, gee, it wasn't such a bad thing that they were talking about with these new visors, this vision wear. That does help with the artificial intelligence. I mean, come on, what's going on? But initially it was like, not very impressed. And they knocked the stock down. Are there other stocks that are going to go back up? Well, very possible. Very possible. What if NVIDIA decides to catch a little bit of an uptail and starts to move? So we still have plenty of time, and we've got until basically June the 14th. So things are going to kind of flip and flow around. before hopefully finally meeting their upside levels. So it does switch the numbers around a little bit. Let's take a quick look at what. Again, this is the pullback, right? So if we get a nice pullback in here for a minute wave 4, we'd be looking at 14,523. Where did we get today? We got down as low as 43. So another 20 points and we'd be there. And we can continue to move down 14,471, 14,419, but I don't want to see it below 14,335. Then 4 is overlapping 1, and we don't like it. But we have 1, 2, beautiful 3, do a nice 4. And if that, otherwise, today's low of 14,548, 43, excuse me, completed it. Now, let's just take a peek if that's the case. So let me get rid of these, right? We have 23 down there, which with our possibility. We have the 50, the hourly 50, right at 29. So we've got support 29 to 23. If they want to bring it in and bring it down, let's go take a peek. They're bringing it off a little bit right now. But that's okay. We need fourth waves in both of these, the S&P and the NASDAQ. So we'll look at that. Now, let's just say that it doesn't, and that 43 did complete it. Well, what can we say about that? We can do this. It's going to be pretty tight, but I'll show you how we want to use it. We're looking at the, now I got to go inside and fix these. So we don't need that one. I don't need that one or that one. I'll keep that one, not that one, that one, that one, 2, 3, 6, 1, 3. And we'll go here. I'll go 2.618 and 4.236. These are going to be big numbers, but then the waves are big up here anyway. So we just cleaned it up. Okay. So if indeed that did complete the little 4, and we're now in the 5th, 1.618 is 14,686. Kind of almost the same area where we didn't quite, but we can get up there, right? We got up to 94, so that's got to be out. So, but we can get just above it. Then we have 2.618 of 14,774, and that would be along with the minor 5 being 382. So we got that there. Then we've got another cluster right in here. So, and it could. Now, if anything, if I have to switch this back around, just say 1, 2, 3, 4, and a 5, move this 3 over to here, we're looking for a much larger drop back down. So for right now, I really am going to leave it right here. I am going to see how this all pans. In essence, folks, if this is the 3 and this is the 4 and we get up and all we need to do is break above 14,700, we have resistance in terms of where minor 5 can come in. And we have it all the way up to 15,000. Now we can add to that. We have numbers that get us up closer. We have 2.618, 4.236. These are the multiples that you use on a fib basis when you're trying to compare fifth waves to first waves. And this particular first wave was pretty small. So I'm going to leave it that small, 1 and a 2, small, quick, and all we go. And that's where I'm going to leave it for today. So not the cleanest move, but I'm telling you, it continues to just park itself, and we try to connect the fibs. We try to see where it's going to go. We have upside, downside from here. If this is all done, but for some strange and bizarre reason, again, the transfer of, or just the transition from a primary B wave to a primary C wave should be quick, should be pretty powerful to begin. So, yep, we got a nice drop, but look at this on the hourly chart. It's nothing. But when we were trading it on the shorter term charts, it was pretty good. Boom, they did a nice rally in between. They came knocking it back down again. So an ABC down could be the 4. Could be the 4. And now we're just going to check it out and see what they could do in here. This is kind of messy. So we're going to wait and see. That's how we got to go. And I'm going to complete it right there. And for tomorrow, in terms of economic data, let me just take a peek. What we got coming out on Tuesday, nothing, none scheduled, zip. So we'll have to be totally up to how people want to come in and what they're going to trade. So we have nothing. We have no scheduled speeches by anybody within the Fed. So we have to wait till Wednesday, where we have a trade deficit at 8:30 a.m. and consumer credit at 3 p.m. in the afternoon. That'll be interesting. If consumer credit continues to bulge, it could not be pretty. But we'll see. Right now, it's forecast to come in a little bit less. All right, that'll be it. Our next update will be on Tuesday, June the 5th.